Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by my company, Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Well, today we're going to talk about one of my favorite topics right now, and that's the office market. Obviously, there's been a lot of disruption. We're still recovering from this pandemic. A lot of the big companies are not back in their offices, or they're slowly getting back in the office. What is that doing to the office market? How's the office market performing? What are cap rates doing? What are rates doing? What's it mean for the office sector moving forward? Please welcome my guest. It's David Kahn. He's Director of Market Analytics with CoStar. He's joining us in Studio One. David, thanks for being here.
Thanks for having me, Michael.
Well, David, let's start with the country overall. I know different markets are reacting differently, but where are we on occupancy levels in the office market today as compared to when we were partying like it was 2019?
2019, yeah. We're up about 300 basis points since around pre-COVID, right before the pandemic hit. So that accounts for about 150 million square feet of negative net absorption since then. So obviously unprecedented numbers, firms looking to downsize, shed some space. Sublet availability is up to around 200 million square feet, which is 80 million above where we were pre-COVID. But one thing I will say is the vacancy rate overall of about 12.5%. It's still below where we were at the great financial crisis and below the dot-com bubble as well. Yeah. So despite some of these negative headlines and some of the negative absorption that we've seen, we're still not quite to that level. Yeah. But we'll see.
Yeah. What about the amount of sublease space? I mean, it really skyrocketed. What are you seeing lately?
Lately, the pace of sublet availabilities has actually slowed. So we're up to about 200 million, as I mentioned. That's up from up about 80 million compared to this time last year or pre-COVID. But that increase has started to slow a little bit more. We're not seeing firms just put a ton of space. Some firms have actually taken back some sublet space, some of that turning over to the landlord, becoming relet space. But it really seems like the situation has stabilized from at least the sublet market so far. Still 200 million square feet is a pretty big concern for the country as a whole, and that should weigh on the market for at least a few more quarters, probably a few more years.
Yeah. What about rental rates? What's the impact there?
So overall, rents have been relatively flat. Our asking rent series doesn't take into consideration TIs, concessions. So from an asking rent perspective, we're actually pretty stable right now. Now, a few markets like San Francisco, New York, have seen asking rents fall, but most markets are right around flat or a little bit positive, a little bit negative. What we usually see when it comes to office is because of how leases are structured, you won't see rents fall until leases start to really churn over the next few years. Yeah. So it really hasn't baked in the effects of the market just yet. And we'll start to see that if we do see more of an impact on rents, we'll start to see that over the next few quarters, the next few years, as long as leasing activity remains relatively subdued.
Yeah, and I think that's the kind of the big question my audience may have for us or for you as the expert. Is what's the future like at the office market? Is how long does it take the market to recover, and are there certain cities and markets that could take longer?
Well, the big leading indicator that we use is leasing activity, right? You sign a lease, you usually don't move in for a few more quarters or even a few more years. So what we track is just the overall number of leases in the market. And right now we're up a little bit in Q2 compared to the previous quarters, but we're still well below that pre-COVID level. So we don't expect to see absorption really hit that critical mass of pre-COVID levels until we start to get leasing activity back up to those pre-COVID norms. Market to market, it is across the board essentially. Most markets are seeing firms shed space, are seeing an increase in sublet availability. You do see some green shoots here or there. You do see some big leases in certain markets, but all in all, it's still relatively subdued in terms of a leasing environment, and that portends to pretty slow next few quarters from a net absorption perspective.
It seems like some cities kind of reacting to this differently, right? If you told me I could get in my car and work in Atlanta and go to work and have 1,000 square feet per person, I'm like, you count me in. But if you said, Michael, get on the subway and crowd in with a lot of people and then get in 150 square feet per person, I may be a little reluctant to go back. What do you expect for big cities like New York and Chicago for return to the office and then the impact on the market, the office market?
Well, the thing is with return to office, it's almost like every person has their own opinion, every firm has their own plan, and those firms, as you see, some tech firms are walking back what their return to office plans were or pushing it forward. A lot of what we're hearing is the target date, Labor Day, post-Labor Day, to get back to at least some kind of a few days of the week back in the office. But again, that seems to change at the drop of a hat. Overall, from really a broader perspective, vaccination rates rising really does portend to getting people back into the office at least a few times a week, returning to normal. We talk about the tax base, all those restaurants in downtown areas or suburban areas that rely on office foot traffic. It's really important to get people back in there and just get back to normal, because we've been living this kind of bizarro world life for the past year and a half, and I feel like everyone's just kind of ready to get back to some sort of normalcy.
So some of the headlines I've read that office is dead, the big cities, it's always going to be work from home, so it's not dead.
No, it's not, and a lot of those headlines, and we kind of joke about it. You like to cherry pick. Is there going to be more rural or total remote work? Generally, you see those anecdotes out there, maybe in the mainstream media, but if you actually look at the data and you look at what firms are trying to do, they're being selective about the space that they're trying to forego or sublet. It's not this big mass migration to remote work. It's a few firms here or there. Maybe they're testing things out. Maybe they're putting some space up for sublet or bringing it back. They're trying to figure out what they can do, and a lot of that is listening to their workforce. What do they want to see? Do they want to be pure remote work, or do they want to be more of a flexible work? Do they want to have a more hub and spoke type environment, or do they want everyone downtown? And those are the types of decisions that will play out over the next few years as these leases turn over.
Yeah. And you mentioned suburban and CBD. Are you seeing anything, the numbers to show any of this really happening, or are the suburban markets doing better than they were?
Not necessarily, and I think that would surprise a lot of people. Leasing activity in urban and suburban areas have been pretty equal when it comes to versus pre-COVID. It's pretty much down everywhere. One thing I will say though is if you look at multifamily rents, they were down significantly in the downtown urban areas, and now they're way up this year. So to me, that speaks to people wanting to get back down to the downtown, to the urban live, work, play type environments. And the middle word there, live, work, play, people are expecting to eventually go back to work, while during COVID they were able to either move back home or move out to the suburbs for a little bit more space. People are starting to realize they want to get back to that urban environment. Sometimes they can get a better deal now that rents fell last year, but the fact that multifamily landlords are raising rents at an impressive pace in suburbs and in the urban areas, it's a sign to me that that demand for the urban living and part of that working in an urban area is still certainly compelling for many people.
Yeah. And I think a lot of people in the office sector that like to buy opportunistic properties thought there might be some opportunities. What are you seeing on sales transactions today?
So deal volume in Q2 so far, we're tracking about $15 billion worth of deals in the second quarter. That's likely to rise as we find out about some more deals, and there's about a week to go as of right now. But that is down from Q1. It's also down from Q4 when deal volume was a little bit back to normal. So the overall, when we're looking at it from a sales perspective, no one's selling at a discount. Very few distressed sales, if any, out there. And a lot of these well-leased, well-located properties are still selling for a premium. And companies who are looking to invest in office, they're willing to pay a premium for that really high-end product.
Yeah. Yeah, and I sell office buildings. I lead a team that does that, and we're seeing the same thing. We're seeing cap rates equal to what they were before, and in some cases a little bit compressed. There's a lot of capital in the market, looking for opportunities. But I guess if you have a good bit of vacancy, you probably don't want to sell right now, right? So it's only maybe the top line properties, the higher price, lower cap rate things that are selling.
If you don't have to sell, why would you sell right now, right?
Yeah.
In a lot of cases,
Yeah.
and really a lot of those well leased properties, credit tenants who are on a long-term deal, you can essentially equate that to a long-term high yielding bond in many cases. We like to throw that out, but even as you mentioned, some more value add type properties, if you can get that at a discount in an area where strong demographics. Maybe there's some net migration, maybe there's some strong population growth. You might see some organic growth in those smaller businesses that fill those types of areas. That could be a potential play.
And we hear that institutional capital that used to only want to look at the primary cities, the really big markets, are now more interested in secondary markets, like Atlanta, like Austin, cities like that. Are you seeing that in your numbers?
We are, with a caveat of it's more of there's such a decline in deal volume in the gateway markets that relative sense, the secondary tier 2, tier 3 markets have seen an increase relative to the decrease in your San Francisco's and New York. But when you do look at quote tier 2 or tier 3 markets, if you consider Atlanta a tier 2 market, we could argue about that, but feeling more comfortable, a lot of these firms deploying capital in areas with strong demographics, strong educational institutions, which is huge because where are firms recruiting from? They're coming right for the top high-end schools and most highly educated workforce and the places that can attract and retain that workforce. And that, throughout COVID, even with COVID, that's going to be a huge, huge impact on what office users, where they're going to be locating, and where they're going to be looking to expand.
Yeah. So are the trends and demographics happening today surprising to you or normal? Or, a lot of people say that people are moving out of the cities and moving to the suburban markets or moving to states that have no taxes or less taxes. Are you seeing that in your numbers?
Looking at the most recent census trends, we actually was a little surprising that the 2020 numbers were essentially in line with the past few years. There was no mass migration to specific metros. It's just, we've seen that Sunbelt migration for decades, and really over the past 5 years, the most recent numbers were essentially in line with that. What we have seen is a little bit more of a migration to suburbs, but that's likely temporary just due to COVID. And now with these rent trends I was talking about, people are flooding back into the urban areas pretty quickly right now. Pretty strong net absorption that we've seen there for multifamily portends to a more robust live, work, play environment in a lot of downtown areas.
Yeah. And tell me if this is true. It seems like the economy is in a really good trajectory right now and that things are looking really positive. Is that going to have an impact on the office market? It should help, right?
Well, rising tide lifts all boats, right? And with all the fiscal stimulus that helped us get through the crisis, with all the help, the assistance from the Fed, we are in a good spot economic-wise. And the question is, how long is this boom going to last, and how strong is this boom going to be? It's not an if, it's a when, right? Or how long it will happen. So that's a pretty unique spot to be in compared to the past 10 years when economic growth from 2010 to last year was very slow and plodding and steady. So yeah, there's absolutely upside there when it comes to the overall economy. If we do see that big growth and we do see a big surge in office using employment, perhaps that could create or lead to more office demand, even with companies looking to shed space or become a little bit more flexible with their in-office environments.
Yeah. The square footage per person in the office market for years has been declining, and on this show, as I've interviewing people for the last several years, I said, look, I don't think that's going to last. I don't think that's healthy. I don't think that's right. I think, well, if you've got a great, a poor job economy, people just looking for jobs, maybe you can squeeze them in. This pandemic, people are more health sensitive now. What do you expect for square footage per person? Are you guys looking at that potentially rising or staying the same as people start to renew leases and get people back in the offices?
I think that's a potential trend that we could see. I think it's a little early to tell, but I think the main factor there is firms really listening to their workforces now, both in terms of location, the types of assets that they're looking to lease, that they're looking to be in, but also within that property, safety concerns, hot desk versus having your own actual office, and being sensitive to each individual's concern, because that's been a huge factor since COVID, at least what we've seen recently. Probably a little bit too early to tell whether that trend will reverse itself, but labor is in the ascendant right now, whether it's the minimum wage jobs, which you see outside, they're posting the $500 signing bonuses for Wendy's or McDonald's, but that works its way up to white collar labor as well. And if people don't want that type of situation, they want a little bit more space, they want to have the option to work in a suburb or to work from home maybe once or twice a week or once or twice a month, that's going to be something that firms will need to react to, and that could have an impact on space requirements.
Yeah. The safety, if you lead a big company, like here, we're close to, really close where we office here in Atlanta to UPS and Mercedes-Benz headquarters. And as I look at their buildings, they look pretty empty right now. But when I look at some of the smaller tenants and some of the office buildings and properties that we sell, they're very vibrant. And they're using their space at these smaller offices, at least from my broker point of view. Are you seeing that in any of your numbers? That the larger spaces, they're just not coming back yet, or maybe the smaller ones they are?
Well, we have seen the C-class, the 1 and 2 star type properties have seen vacancies stay relatively flat. A lot of that is likely due to a lot of those being owner occupied. So your smaller businesses, they're going to go in if they have 4 or 5 employees or up to 10 or what have you. When it comes to low-rise buildings versus high-rise, logistically, it's a lot easier to have people in when you don't have to worry about elevators during a pandemic. Now that we're in the transition mode back to that and people are getting vaccinated, we're likely to see people start to fill back into those high-rise offices and the big office like a Mercedes-Benz, like a State Farm down the road.
Well, it seems like if you've got thousands and thousands of employees and you're getting people back in the office, and some of those people do not want to get vaccinated, and then maybe somebody gets COVID and passes, what a PR nightmare. I mean, even if the employees want to get back and the companies want them back, is that one of the reasons that some of these companies just are maybe afraid to get people back together? And how can they? It seems like if I had a big company, I want to tell everybody, hey, you can come back, but only if you're vaccinated. And then you got people like, oh, good, well, I didn't want to come back. I like working on my PJs. I'm not getting vaccinated. What's the answer?
I think a lot of it, first of all, I don't envy any of those decision makers for sure. I think a lot of it is what's best for the company and looking at individuals. And each individual is different. They have their own predetermined notions of certain things, and you have to be sensitive of that to an extent. But at the end of the day, if you're working in an office and you were before COVID, that's a compelling reason to get back to the office after a pandemic's over and there's a vaccine that's safe and effective, that's in circulation and quite easy to get. So I don't envy those decision makers at all. But the sooner that we can get back to normalcy, I think the better for everyone.
Yeah. Well, and I told my people at my office that, look, you're welcome back. We'd like you back. And if you're vaccinated, for sure. If you're not vaccinated, then we'd like you back. But in the common areas, we want you to wear a mask. I don't know, those are some tough decisions. And I would tell anybody out there, in my opinion, get vaccinated. Come on. let's get everybody back. I had COVID, wasn't that bad for me. It was a couple of days of being really tired, but then I've had both, the vaccines, and it's liberating. Go out and live your life. Do it, right?
It's a different feeling to get back in the office. I mean,
Wonderful.
I feel like, and to work and to meet with your colleagues in person, it's you feel like you're in a little bubble when you're on Zoom. I think we all have that same feeling.
Yeah.
And this is a lot different than doing this over Zoom, in my opinion.
Oh, absolutely. We deal with a lot of. We've been pretty active during COVID, and when we deal with companies with work from home people, the inefficiency is just crazy. And then we deal with people that are in the office, and it's not like, oh, well, let me see if I can get a Zoom appointment on their calendar. Well, you can't get them because they're watching Netflix at home, and, but you're dealing with another company where everybody's in the office, and let me check with John. Oh yeah, we've got it, we're done, we can move forward. So I think when companies have the option to deal with companies that are working from home, and you're going to want to, in my opinion, want to work with companies that are working more efficiently and more effectively. And I think the top line and bottom line numbers are going to be impacted, and people are going to want to get back in the office. And I also think we're people, right? We want to be together. We'd like to have another place to go. We've been confined for too long. We want to get out and meet people. And then look, if you care about your career, the people who tend to rise up in their companies and their careers are visible. They're around the leadership, right? They're seen, and they're learning, and they're advancing their career. So I think when it comes to productivity, culture, efficiency, recruiting, retention, growth, security. Do you want people working from wherever with all your company's information sitting there on their laptop? I think there's a lot of reasons that the office market, in my mind, comes back. But I saw office buildings. I may just be rooting for the home team, right?
No, I think a lot of it, in the way that I would look at it, is inertia, right? Something in motion wants to stay in motion. Something that still wants to stay still. Well, a lot of people who've been working at home, they feel like they can do that, do the remote work. But once you get back to the office, and we were talking about this before, it feels different. You feel more productive. I personally feel more productive getting back to the office, and I don't want to go back to remote work. So I think a lot of it is once people do get back in, whether it's the Labor Day or the end of the year, once the childcare situation is figured out, and school-age children as well is a huge factor. Once we get back to normal through the second half of the year, what we're looking for is how much of that is going to translate into that leasing activity, into the leasing volume. One thing also is, if you look at LoopNet search activity, so our marketing platform, that's up compared to last year, about 25% nationwide. So if you look at it as a leading indicator for leases as a leading indicator for demand, hopefully that will lead to a little bit more activity when it comes to the leases and transaction perspective. Because if you're searching for space, it's a pretty good chance that you'll actually lease that space or buy or sell.
Right. And the tenant reps that we have here are seeing a big uptick in activity, and they're very busy, where they were a little slow in 2020.
Yeah.
They're very busy again, so another leading indicator, right? Well, David, great information. Thank you for joining us, sir.
Thanks, Michael.
Appreciate you being on the show.
Absolutely. Thank you for having me.
All right. And thank you for joining us around the country. We appreciate you sharing the show, commenting, rating us, whatever you like to do. You can also subscribe to the show on your favorite podcast or YouTube, or even on CREshow.com. So until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decisions with on-demand mobile data. Visit buxtonco.com. By Bull Realty. For proven commercial real estate asset and occupancy solutions, contact me. My email is michael@bullrealty.com. By Commercial Agent Success. Expert level commercial real estate broker training. Cloud Access 1 up to 21 one-hour videos. Visit commercialagentsuccess.com. thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.